Hi and welcome to this live currency strength indicator table video with me, John, on this Monday the 20th of March. Here we can see we have our two types of tables in front of us. We have our trend traders table and our day traders table. These are the same studies but just highlighting different time frames. Some of the currencies here are highlighted in green. That means there is a confluence between those time frames, and that's where we'll be focusing most of our attention in these videos. The tables auto update every 5 minutes 24/7, meaning that our members can see how the markets stand right now in real time. Now these tables help us strip out the noise and focus on today's actionable pairs. So what are today's actionable pairs? Well, we're going to be taking a look at New Zealand US dollar today and also US dollar yen. We can see that the New Zealand dollar is the third strongest currency on both tables. The US dollar is the third weakest currency on the trend traders table, but it's the second weakest on the day traders. The yen still tops both tables, and that's no surprise really. Today we're seeing more pressure on the European banks, and the yen is going to remain strong in that risk-off environment. We can also see the pound is the second strongest currency, so you could also be looking at potentially pound US dollar long opportunities in the market. However, we're going to jump into New Zealand US dollar first, and then we're going to go take a look at dollar yen as prices approaching some really interesting areas. So if I go into Kiwi US dollar here, we can have a little look at the larger time frame narrative, and we can see that price has obviously been moving back to the upside ever since it came into these key structure lows down here around about the 0 spot 55.50 level. We've then rallied up to the upside into that 0 spot 65.25, where we kind of formed a bit of a double top pattern here, or at least a failed new high. Price has then traded back down into some key area of support, which is the 0 spot 61 handle. Now, the last time we spoke about Kiwi dollar, we mentioned that there was a potential for this to be a larger time frame inverse head and shoulders pattern. So you've got your left shoulder in here, your head, and your right shoulder of the pattern. Now, typically that means, from a technical perspective at least, that price could potentially move to the upside, maybe even breaking through the neckline, which is around about that 0 spot 65.25, and head into the next area of resistance, where we have these two trend lines here, or even these previous structure highs around about the 0 spot 69 handle. Now, looking to see if price will move higher due to the currency strength indicator tables. However, if I go into a lower time frame, you'll see that price is actually failing to trade above a key high here. So price looked to have gapped up overnight, okay, after obviously the news. So on Sunday's open, we gapped up. Price has then pushed back to the downside here on Kiwi US dollar. So not ideal circumstances here to be going long right now, okay. What I would have preferred to see is price actually trade above this key area of resistance, which is that 0 spot 62.50 handle, then come back, then continue to push to our next level of resistance, which is the 0 spot 63.75. That would be my most ideal thing, but obviously the market is going to move how the market moves. Now, if I go into the 4-hour time frame here, again, you can see the sort of aggressiveness of this short coming in at the moment. However, there are a couple of areas where maybe price will start to find some demand. So if I go to the hourly, it looks a little bit cleaner, and you can see we've almost got a sort of opposite effect here. We've almost got like a head and shoulders pattern in there, with the potential for price to move a little bit lower. So I've marked out this area down through here. Now, the 0 spot 62 handle sits just below that zone that I've pointed out. Now, I've pointed out that zone because you can see that we started to sort of pause here before we started to have aggressive buying coming into the market. So if the tables are suggesting to us that we should be looking for those long ideas, we could be looking for long ideas around about this area here, where that 62 handle comes into play. The other alternative area that I'm looking at is actually a little bit lower. Now I haven't put a line through here because the 200 moving average is in and around the same area. So it's around about the 0.6150, and it just runs below these areas here. It's actually this sort of zone where I've kind of marked this zone out in here. And we've got the 200 moving average in there. So if price was to continue all the way down here, I actually think buyers may step in around about these lows. So that's another idea that I'm looking at. So multiple opportunities, I think, on New Zealand US dollar in the short term. Maybe even if we look for maybe a long from here back into the sort of resistance areas, or if price, like I said, can come down into these lows, rally back from there. The only thing I don't like about this area here is your reward to risk ratio back into the resistance. So I did mark out this level, this zone of previous structure, because what we could often see, if I go into a lower time frame, for instance, let's say price rallies in and around this area here, comes back, forms that double bottom pattern, rejects. You know, the only way I'd be looking to get long is on a really low time frame, which would be sort of my 5-minute chart or even my 15-minute chart here, because that would give me enough reward to risk to be able to trade back to the upside there. So that's the only way I'd really look for a long position, but I'd want to see buyers step in here. I'd want to see a good push back to the upside. I'd want to see a failed new lower low being formed. That to me would then signal that maybe the sellers are running out of steam here and buyers could take control. Otherwise, I think price is going to move down to our next level of interest. So really speaking, I only want to be long if price can come a little bit lower, maybe into that 0.62 handle, or if we want to be a little bit on the cautious side of things or conservative side of things, we'll wait for price to trade above the highs, make sure we get a few closes above, and then look for the continuation at that point. Okay, now the other chart of interest obviously was dollar yen. Okay, we can see that the yen's still a really strong currency. Dollars appearing as weak on the tables. We do obviously have a lot of data surrounding the dollar this week as well. We have the FOMC federal funds rate decision, so that's going to be something to keep our eyes on going into this week. However, looking at dollar yen, we're actually at a level of support. So you can see down here we've got the 130.75 handle marked out, and price is finding support around that area at the moment. If I go into a 4-hour time frame, you can see that we're actually rebounding from that area at the minute. So what I've done is, again, I've come to a lower time frame just to make it a little bit cleaner for us. We've got the 131.75, which was an area of support in here, okay, but was also the area where strong selling pressure came from. So we had a little bit of selling, a pause in the market, and then strong selling pressure again. So I'm looking to see maybe if price comes back to the 131.75, can we see some selling again coming back down towards these lows. Now again, I think you're going to have to go to a much lower time frame in order to get your reward to risk ratio there. Alternatively, if price trades a little bit higher back into these previous structure highs in here, you can see I've already got a zone mapped out there, which is around about the 132.75. Now if price comes back into there, maybe as well we'll start to see some further selling pressure. But obviously the headline risk at the moment is what's causing the yen to strengthen. Obviously if that circumstance changes, then the whole sort of market narrative could also change. So we've got to be a little bit careful that we are sort of trading the headline risk at the moment. So we'll see what happens here. But those are the two sort of opportunities that I'm looking at the moment. I'm looking at the potential for dollar yen to come a little bit higher for another opportunity to the downside, or we've got the New Zealand US dollar potentially coming into an area of demand. Here we want to see either a double bottom form and a move back to the upside, or we want to see price come much lower. Hope you enjoyed the video, and I look forward to speaking to you in the next one.